Well, Tiffany and Company's the big revamp is paying off big time. Those shares soaring today. This after the company reported better than expected first quarter earnings, beating the estimates by the widest margin since 2010. The results really, in my mind, cover an amazing economic spectrum, and I think it serves as a barometer for even greater trends. For instance, tourism. People are coming to America, and they're bringing gobs of money with them, and they are spending it on high-priced goods. China continues to be a great growth place. The growth there, in fact, remarkable, and it's another reason we need greater access to that country. On the other end of the spectrum, Europe's decline is equally remarkable and further shows why America needs to avoid those policy mistakes that they've made there for many years. Joining me now to discuss Liz Peek, FoxNews.com columnist Phil Blancato, Ladenburg Thalmann asset manager and management president and CEO. Shah Gilani, he's with Capital Wave Forecast. He's the editor there. He's remote. So, Shah, I'll start with you. 8 of the top 10 movers in the S&P 500 were all retail names, and 7 of them were brick-and-mortar names. What do you make of it?
Well, first of all, hats off to you. I think Tiffany is one of your favorites. I know you'd recommended it, if I'm not mistaken. So
thank you very much. You'll be back on the show
today. No, that was a tough call. I don't know how you saw that coming, but hats off to you. Absolutely brilliant call. Sales, earnings up 54%, revenues up 15%, same-store sales up 14%, just hitting it out of the park, and it proves that Tiffany's getting it right. And the other retailers, the bricks and mortar retailers, I got to admit, that's a bit surprising to me, but they're really doing very well. They're catching on to the online game, and they're just doing everything they have to fight Amazon. Yeah,
Phil, when Macy's reported, they actually said they sort of found the magic elixir, which is online, which is mobile, a great mobile experience coupled with a better brick-and-mortar experience. But broadening it out a little bit, and I do want to give you props because I saw early in the month you were saying the market would go higher, propelled by consumer spending.
You're in a Goldilocks moment right now. You still don't have runaway inflation. You've got full employment. You got people making, their quality of their lives are better. Then couple it with, look, the reality is somehow the euro is still stronger than the dollar for a lot of different reasons. But when a tourist comes here and they can buy things on sale, a strong U.S. consumer, 70% of our economy, which is right now the savings rate looks where it's supposed to be. They're earning money. They're employed. Coupled with the #1 tourist destination in the world, you've got a healthy U.S. economy that is expanding.
Also, Liz, go ahead.
And an optimistic country. I mean, I think that is as important as anything. This is the most discretionary of discretionary expenditures, right? Buying jewelry. Nobody bought it during the recession. That's why Tiffany went through a really tough patch, and other companies in the sector, too. But people are feeling really upbeat about jobs, about their income. That's why they're going back to Tiffany. It is certainly largely tourist-driven, but you know what? Americans were in there, too, which is terrific.
Yeah, well, same-store sales were up 9% on a constant currency basis in America, China, and Japan. Down 9% in Europe. And again, I'm telling you, Shaw, this is why I tell people, be careful when you look at Europe and you see free medicine and free this and free that, and you think, wow, they figured it out. They haven't figured it out. They're not generating wealth. They are in standstill mode and they're drifting. And I'm telling you, this is a cautionary tale. The ones who do have money, to Phil's point, they'd rather come and spend it in New York.
Oh, you're absolutely right. I think we're going to see that. We're starting to see the effects of some of that here with this health care, bill that we have had, and it's eating into people's income. So in spite of that, we take a look at Europe, and that's what they do all over the place there. So this should be a lesson for us. However, we haven't turned that page yet, so we're still fighting that battle.
Right. Guys, let me change gears. By the way, the reason I know about Tiffany's is that every time I have a grandchild, I buy this sterling silver piggy bank. And you could go there. They got rid of all that Paloma, Picasso stuff. They kind of put it away. It's been around for a decade. No one's buying it. And they have refreshed in the store. I do want to share one thing that bothered me today. Maybe you guys can help me out here. The median price for new homes are plummeting. And by the way, new home sales missed the mark. Is that something we should be concerned about, Liz?
Well, I think the housing market has been wildly erratic for several months, but going up and down. Housing prices, I think, are very local driven. I'm not sure that we can really extrapolate a big trend from there. Last numbers I saw in housing were actually pretty good. So I'll have to look at the numbers you're talking about and try to figure that out.
Would there be any reason for that other than, I know we hear weather a lot, but something,
Not weather, not this time.
No.
You look at the trend for this year, you're up 11%. So the year number, to Liz's point, we're fine. This month, I think, is the one thing that, look, it's starting to happen. Interest rates are going higher. The cost of mortgages are getting more expensive. So you do have an issue with people paying more. So now it's a price battle, right? There's a lot of homes for sale. There's a lot of new homes being built all of a sudden. So it's a price war. And interest rates going higher is going to put downward pressure. I think it's temporary. It's somewhat transitionary.
Liz, the Fed, did they give us the wink today? Market goes much higher?
I think it was a huge thing in anticipation of possibly a change. The market was very anxious. I think it's another kind of few moment where I think everything is basically on track. One further thing on Tiffany. Big stock buyback in the offing. That doesn't hurt the stock.
Yeah, that doesn't hurt. We've done a lot of segments on buybacks. I happen to like them, but some people don't. Thank you all very much.